What's up, traders? So let's do a complete multi-time frame analysis of gold XAUUSD chart, and let's see what kind of trading opportunity we can have from the chart for next week. So in yesterday trading session, gold price comes under considerable pressure in the US session, and the reason of course was the US labor market report, which was significantly better than economists expected. The unemployment rate fell from 3.6 to 3.5%. Economists had expected a stagnating unemployment rate. Now, why is strong labor market report bad for gold? So, the reason behind this is, you can say, simply the Fed. The Federal Reserve is likely to take good note of this labor market report and feel vindicated in the view that the US economy is by no means in recession. Gross domestic product has shrunk for 2 quarters in a row, which is already widely regarded as a recession. But in the US, the criteria is broad. One criteria, the labor market. The Fed had always referred to the fixed labor market in its last interest rate hike. The strong data paves the way for further tightening of monetary policy and higher interest rates. The US dollar also reacted immediately to the labor market data and climbed upward. As you can see, the daily candle is full bullish candle on this chart, and I already said this dollar chart in the Telegram channel. And as you can see from this chart is taking support on this trend line, and you can see we have a rejection over here. So if dollar is able to hold on this chart, we can see further rise of price from this current price level, and this directly impacted the gold movement. And in yesterday trading session we have seen a big decline of price. So what are the possible level that we have to focus on? We are going to discuss that. So for we are going to discuss COT report first, and as usual we are in the managed money. This is the managed money, and this time the data is very interesting because we have the most of activity is going in the short positions. In the net short position, you can see we have short covering. You can see they have pulled money from their short contact. That means they are covering their short positions, and they pulled the money from the short contacts and adding money in the long contacts. So the data from the COT shows that this is the managed money, but also the chart that I said in previous video. The small speculators hold the lowest long position since May 2019, just before the big gold rally. It's also worth noting that during gold recent peak in March, small speculators had the largest net long position in 4 years. So while this doesn't mean investors should always do the opposite of what small speculators do, it's a sign that gold could soon gain, because from these number the data showing a bullish sentiment, because they are covering their short but they are putting money in the long. But from the past data we have to wait more long position to be added in this report, because compared to short position changes there is no large or you can say considerable large uh, change in the long positions. So we have to wait how next COT report comes out, and how data, what data we can get from that COT report. But as of now, this data is showing some bullish sentiment. But from the yesterday trading session, we can see that gold is in, can say, selling pressure. So what are the possible level that we have to keep in mind? On the price action chart, you can clearly see that after this big decline, gold took support on the level of 1765. And if we look over to this zone, this is currently the high volume node, and the price is trading currently at 1775. So you can see that gold is facing resistance over to this level. So if this price hold on 1765, then we can have considerable, can say, upside movement, and we can expect test toward this price range from where the gold seen a big decline. But in the between, you can see this is the large zone where we have seen a big number of selling that happened. So this going to be act as a resistance. So for short term, I think we can look for buy until this level hold, and we can take a buy opportunity in intraday level, and we can expect a test toward this level. But if gold price decline from this level, then we have to better wait for breakdown of this level 1765, and then we can have another test toward to this area, which is roughly at 1755. So in the upside, the better opportunity for sell is at around the level of 1788, and in the bottom, the sell opportunity only at the breakdown of this level. But if this level hold, then we can look for buy opportunity. So these are the level on intraday. And if we look over to the weekly chart and weekly candle, you can clearly see that this time the weekly candle is indecisive, and we have to wait how price move in next week. Also in the daily candle, you can see uh, we have a rejection in the upper side on this trend line, and the daily candle is bearish. So yes, we can have some decline, and the level that I said is you have to wait for, like, if we are going to hold on 1765 or not. And in the downside, this is the support. So overall we are still in the descending channel, but the bullish sentiment from the COT, and we have to wait how price. Another chart that we have for silver traders, actually you can see a large uh, divergence that previously the same divergence, like this much divergence between gold and silver. So one have to come closer to another to decrease this much divergence. So in the previous scenario, we have seen that silver does well, and it went up, minimize this divergence, and this is same happening this time also. So we can expect further rise in silver, but if silver not going to rise, then we can have some gold chart. So this is for silver trader, because silver is doing better, I think, compared to gold. From last 2 to 3 trading session, we have seen good jump in. But for gold, we have to focus on the current level and the level from the uh, previous trading or yesterday trading session. So we have to keep eye on that level. So if able to break out, then we can look for buy entry toward the higher price level. So we will discuss more about these level in live trading sessions. So thank you and good luck.